Facebook, Skype, Amazon.com got a lot of their initial investment from something called a VC, a venture capitalist. Some of the biggest technology companies got their money from a VC. VCs are the ones that look at opportunity, they invest, and they grow that opportunity. And many of that technology you use every single day. One of the hottest VC organizations is Clearstone Ventures. They're based here in the heart of Silicon Beach. And we're very fortunate to have two of the, I guess, the guys that run everything that's happening there, William Quigley and Jim Armstrong. I'm Ken Rutkowski, Business Rockstars. So guys, every Monday you do this closed door session. What do you call it? You call it a partner meeting?
Yeah.
Yeah, William? You can talk. No head nodding is allowed on radio. Okay? Got it? No head nodding. Okay, and your job is to basically vent what is a good or a bad idea?
Vent is a good word. I would say vet, but vent is also a good word.
Okay, vet. You vet. Vent is just getting all the frustration out. Do you look at what's existently happening in your portfolio also?
Yeah, I mean,
this is what Quigley said.
Yeah, I would say, for the most part, the companies we're talking about fall into one of two categories. They are companies we've been following for a few months. We've done some investment diligence around. Most of the partners have heard about the company already and what it does. And now we're going into a much deeper understanding of what would be the terms of an investment if we were able to do one.
Okay.
Then there are the companies that are just emerging, that they're just coming onto the scene. A lot of those we'll never invest in, but they're doing something really intriguing. And hey, have you heard about what this business is doing? It's a lot like this other business. What Jim said earlier about pattern recognition, that is where the bulk of the conversation winds up flowing. Oh, this company looks like a version of that company plus that company. Those are the kinds of conversations you have.
So if you can, and we mentioned Snapchat earlier.
Yeah.
You have not invested in Snapchat.
No, we didn't.
Actually, most of that money came from up north, I believe.
Yeah, some of the recent money. It was a really fast couple of financings at extraordinary valuations. I don't know if it represents the best investment, but yeah, it came in really fast from some companies.
So if you would find a company that's similar to Snapchat at a much lower valuation, would that be of interest to you?
Of course, anybody who's got the ultimate thing, a lot of these consumer internet startups that you want is you have engagement from consumers, you have their attention. That's a little bit of the holy grail, and everyone gets interested in that.
Okay, so who generally runs the meeting on Mondays?
Well, I got to be honest with you, we all run it, and it is a partnership. And so what happens when those doors close is this. A partner's going to show up and say, I'm proposing an investment. I'm proposing something. And they get challenged, right? I mean, it's a big challenge. And my job is not to tell William whether to do the investment or not, or the same for him to me. But his job is to me to say, to make sure I'm thinking about everything. Tell me about the market, Jim. Tell me about the product. Why this deal? Is this person CEO quality? Who else knows this person can vouch for him? Tell me about the due diligence you did. You present things in writing, you go through things, and you have to be on your toes. And it goes everywhere from macro discussions about where mobile phones are heading and where smartphones are heading, down to the simple things of I think this person has a doesn't have integrity and is going to try to screw us, or I don't like this term in the investment.
But each one of you has to have done your homework.
Being in a partnership is being married to multiple people and making multiple compromises all the time.
I am always the one who brings up what I call the substantive issues. For instance, I'll say to Jim, what do you know? You work for $3.35 an hour
At Magic Mountain.
Magic Mountain. Come on.
No, but so you're very polyamorous inside the office, apparently, right? So as you do this, as you present something, let's go with the idea of Snapchat. Okay, Snapchat would be a great example. That is a social entity. That's something you would bring up, right?
Right. Social, a really hot social fad.
It's social mobile. That's what it is. You would bring it up. William, how would you challenge what Jim brings up regarding
William,
Snapchat?
I really want to do Snapchat. I know it's about a $800 million valuation, but I think it's got upside from there, and I'd like to write him a $10 million check, and we should be really excited about this investment.
I would say, Jim, yet again, you're following someone else's deal. No. No, what I would say is, let's talk about the theme, right? Because we're thematic investors. Communication. Communication is an area that keeps on giving. Every single year, or every other year, there is a massive innovation in the communications area around the internet. Twitter a few years ago,
7 years ago.
You could call even Facebook a form of social communication. So really good theme. But we would probably, for a company that was growing as fast as that one's growing, we'd probably ask various partners, of course, what's the valuation? What was the previous valuation? We'd be trying to look at and peel apart the statistics that the entrepreneurs are promoting. They may be saying we're adding 1 million subscribers a month, or 2 million. We'd want to know, well, what was it 6 months ago? Oh, by the way, are there other people offering anything? And then the hardest question for an early stage company to answer, but we have to ask is, okay, and how are you going to make a buck? And